Okay, also joining us from the sidelines of this Cafe Mutual Conference 2015 is S. Naganath, President and CIO of DSP Blackrock Investment Managers. Naganath, good afternoon. Thanks for joining us. Let me begin by asking you if we are still in a bull market, and how convinced are you that this current volatility is just a passing phase?
I think global market volatility is likely to persist for some more time, in my opinion, maybe another month or so. Probably led by more currency-related volatility in the emerging market currencies. But I think once the volatility subsides, the market uptrend will resume. As far as Indian equities are concerned, I think we're in a very good position as an economy to benefit from lower oil prices, lower commodity prices. I do believe that the GDP growth momentum will begin to accelerate by the time we get to the December quarter. The benefit of lower commodity prices and oil prices will also begin to show up in better momentum in corporate earnings growth by the December quarter. And all of this will, I think, continue well into 2016 and 17, and therefore will underpin strong performance by Indian equities.
All right, Naganath, afternoon. The flows from domestic side continue unabated. So, mutual funds have pumped in more than 4,000 crores in equities in September, despite the kind of fall that we've seen. Do you fear at any point that conviction from the retail end could recede because of the global volatility?
So I think retail investors are taking a medium to long-term view, which is the right approach. And I do believe that over the medium to long term, the economy is going to do very well. Corporate earnings growth will be quite good. And like I said earlier, all of that will underpin strong performance by equities. So I think investors who do take that 2-3 year view or beyond will not have any reason to be disappointed, in my opinion. And therefore, it's heartening to note that the flows continue to be strong. They may ebb and flow a little bit in a given month due to global market volatility, but the trend is positive in terms of flows. And like I said earlier, I think the medium to long-term view for Indian equities continues to remain very positive, in my opinion.
Okay, but just in the near term, have you seen any kind of redemption pressure? Since you spoke about that global volatility from your clients, have you seen any kind of redemption pressure?
Well, it may differ from fund to fund in a given week or month, but in general, I think the flows into the industry and equity funds continues to be reasonably good over the past few months, and we expect that trend to continue into the remainder of this year and into 2016.
The fact is, Naganath, that we have erased all of our gains of the last 1 year and are back to the pre-Modi rally days. What is the return that investors can expect from now, say for the next 2 to 3 years? So in the longer term, what kind of returns would you expect to see now?
Well, we had a very strong year for equities in 2014. So to expect the similar rate of return in 2015, I think would have been a little too optimistic on the part of investors. Over a 10 to 20 year period and beyond, Indian equities have delivered a compounded annual rate of return of about 15% or so. We expect to see a similar rate of growth over the next 10 years or more. But in the near term, the next 6 to 12 months, like I mentioned earlier, you may still have to weather global market volatility for another month or two. There could be some minor weakness as a result of that in the equities market. But after that, I think by November, December, I expect the uptrend to resume and then continue into 2016 in a reasonably strong fashion. Simply because corporate earnings, which has disappointed in terms of incremental growth, I think that incremental growth momentum will be visible by the time we get to the December quarter. And so all of that, I think, will contribute to strong performance by equities later this year and into 2016.
Okay, that point is taken about the compounding growth that we have seen and may well continue over the long term. But in the near term, how high is the possibility of another major correction in equities? Because even this correction hasn't been the 20% plus correction. Is there still a risk of a big downside in the near term?
Well, it's always difficult to put any specific number here, but I would say that should global market volatility persist for another month or two, which I think may happen, then one should prepare for the possibility of another 5 to maybe a maximum of a 10% downside in equities. One should look to buy into this weakness in equities market, because later in the year and into next year, I do think that Indian equities will do very well, simply because in the context of other emerging markets, our growth rate will be seen to be very attractive at 7% GDP rate of growth. and also the fact that corporate earnings growth will begin to accelerate quite meaningfully by the December quarter, showing up the full benefits of lower oil prices and lower commodity prices.
Okay, every bull market has a leader, and in this bull run, the leader has been the pharma stocks. Do you expect pharma to continue giving alpha returns?
Well, I think any diversified portfolio, will have representation of many sectors. It's a constant evaluation of the relative return of different sectors over various time periods. So I think a diversified equity portfolio certainly will have some exposure to the pharmaceutical sector, but that will be more on a company by company specific basis. I think, pharmaceutical sector has given reasonably steady state returns. If you look at the last 5 years or so, I think that trend will continue. But at a point in time, if you do feel that the banking sector will give relatively better return over a 1-year period, the fund manager may then decide to allocate more of a weightage in a portfolio to banking versus pharmaceuticals. So this is something that is dynamic. It evolves from day to day. But like I said earlier, I think any diversified portfolio will have representation across many sectors.
Okay, it's good you mentioned banks. I was coming to that. We've seen a lot of correction in private sector banks. Stocks like ICICI Bank, HDFC Bank have corrected quite a bit. Will you be increasing allocation to private banks now?
Well, I cannot comment on individual stocks, but all I'll say is the banking sector has a huge weightage in any bellwether index. And while the stocks in the banking sector, have seen some amount of correction in the recent bout of market volatility, if you do take a 1, 2, or 3-year view, I think the sector is poised to do very well as the economy picks up momentum, growth momentum. And private sector banks, we think, will do well. Even public sector banks, I think, we think will do very well over a 3-year period.
Okay, public and private sector banks will do well over a 3-year period. But, in the next few months, we have many important cues, whether it's the Fed policy next week, the Bihar elections in October, and earnings as well. According to you, which is the most important cue which could impact the market direction?
Well, I think, the markets respond to various factors every day, global, local, national factors. I think, as far as the Fed rate hike is concerned, or the potential for a Fed rate hike is concerned, my own view is, given the recent global market volatility and the somewhat less than expected rates of growth we're seeing in the developed economies, my view is any rate hike by the Fed will more likely be sometime early in 2016 and not in 2015.
Okay, finally then, Naganath, which sector do you think will lead the market uptrend once the uptrend resumes, that is?
Well, I think banking will be probably one of the large sectors that will do very well once the uptrend resumes.
All right, Naganath, thanks a lot for your time.